Good afternoon, everyone. Thank you for tuning in. On behalf of Manila Director of welcoming members and non-members alike to today's session. Today we discuss a topic everyone wants to know more about but still not fully understand. Everyone's talking about cryptocurrency. Elon Musk famously bought over $1 billion worth of Bitcoin. Suddenly last week he said concerned about the impact of mining Bitcoin on the environment and therefore be suspending and still holding to it. There was an attack on Colonial Pipeline, and the company paid ransom to the hackers in the form of crypto, which was a controversial move. On a philanthropic note, though, Vitalik Buterin, the founder of Ethereum, donated over $1 trillion in Bitcoin to India's coronavirus crisis. That wasn't Bitcoin. He used various crypto coins. So today, to talk about cryptocurrency, we have Stan, who is a senior marketing manager of OKEX, the leading global crypto exchange, to break it down for us and explain how cryptocurrency works, how to invest in Bitcoin and other cryptocurrencies, and start trading. Moderating discussion is Leo Alejandrino, a non-executive independent director since December 2020. Leo is a chairman and president of Capital One Holdings Corp, a private investment holding company, as well as a number of private companies of a similar nature. He was formerly CEO of Peregrine Capital Corp, a Philippine investment bank, president of Price Waterhouse Financial Advisors Incorporated, a local managing consulting company. He was president of Jardine Manila Finance and Commercial Credit Corporation. He's held directorships in a number of publicly listed companies, including House of Investments, Seafront Resources, Sime Darby Philippines, and SPI Technologies Incorporated. Leo has extensive experience in corporate finance and mergers and acquisitions, corporate advisory and restructuring. Leo holds a BSc and Master's of Science degrees from the London School of Economics and has an associate in arts degree from the American College in Paris. He's a director of Philippine Business for Sustainable Development, a nonprofit organization. Before we begin, just a few ground rules. This webinar is being recorded and will be up on the Manila House YouTube channel in a day or two. Please use the chat box and the Q&A box for any questions and comments, and we'll get to your questions as we go along. Just a disclaimer, we have been presenting cryptocurrency and blockchain webinars as part of our mission to inform and educate. This does not in any way constitute an endorsement by Manila House of any institution or exchange. Thank you very much. And now Chris is very enthusiastic about cryptocurrency. And as you can see, he's a young early adopter. And he'll tell us about his journey towards crypto and why he believes in it so much. Chris?
Thank you, Bambina. Good afternoon, everyone. So I just wanted to share with everyone my thoughts on cryptocurrency. And I actually have only about 30 minutes to be able to do this. So I'm going to try to be as concise as possible to give you guys an idea of how cryptocurrency started and where it came from. So let's start with this premise. Currently, our systems are broken and inefficient. They're prone to hacks, prone to corruption, leaks, errors, and inequality. Now, the problem is that it's centralized. Everything is centralized at this point. I want you to think about this idea. Everything that you know, like for example, your bank accounts or the monetary system, it's centralized in one server. The government, all their information and data is centralized on their servers. With that idea, the problem is it's vulnerable to cyber attacks. And we've seen that happen throughout time. And that is a scary proposition where hackers can literally go into one server and be able to steal money, destroy systems, and basically create chaos. So that is one big problem we have right now. The other one we have is lack of transparency. The Philippines is a prime example of the lack of transparency and the lack of checks and balances. And this is what allows corruption to be rampant and unabated. It's very difficult to be able to verify the truth and to be able to verify any information and to trust the government when there is no transparency in the system. So the other problem we have is the slow and inequitable and inefficient financial system we have right now. Imagine if you wanted to try to send money. And in the Philippines, this is a common thing where we do remittances, right? I want you to imagine this. If you were gonna try to send money to another country, how long would it take you to wire transfer it? 5 to 7 days, and it'll cost you, about $50 or a fairly hefty amount to be able to transfer money. And that is a system that's antiquated for over the last 70 years. We've been using the same system, the SWIFT system. Let's also add the fact that the government and the financial systems are clearly broken. How so? I want to start with the 2008. I'm not sure if you guys have seen this movie. It's called The Big Short. The Big Short, and I think Leo is very familiar with this one. It's a movie about the mortgage crisis that happened in the year 2008. It sounds so long ago, when the entire banking system in the United States collapsed, and the government, the US government, had to bail out all the banks just to be able to keep them afloat. They bailed them out in the hundreds of billions of dollars. Otherwise, the whole world will be affected by this indiscretion that the investment bankers in the United States have perpetrated upon the people. And the government used taxpayers' money to bail them out. And what did they do? They gave themselves fat $1 million, hundreds of millions of dollars of bonuses. When everyone lost their homes, lost their money, became bankrupt, the bankers in the United States earned hundreds of millions of dollars of taxpayers' money. I want you to also think about in 2013, Venezuela is a prime example of a government that doesn't work anymore. When the government started to print all this money in Venezuela. And what happened? I don't know if you guys are familiar with this. In Venezuela, the current inflation rate since 2013 averages from 1,000% to 3,000% annually. That's an insane amount that you can't even fathom, right? This is the very reason why we needed to fix the financial systems in the world. And this is where Bitcoin comes in. Now, I know a lot of you are probably thinking to yourself, what is Bitcoin? It's so confusing, the idea of Bitcoin. Let me try to put it to you this way. And maybe I want you to think about this. Think of something. Let's say, for example, I'll use Leo since he's my moderator here, to throw ideas with. If I sent Leo a photo online, would I have a copy? I would. If I sent a video to Bambina, for example, would I have a copy of it? I would have a copy, right? A document? How about a PDF file? I'd still have a copy. I want everyone listening right now to think about this. Think of that one thing you can send online that when it's sent to you, I don't have a copy of it. And you're the only one with a copy. Can you think of something? If you can, type it in the chat box. I'll give you 10 seconds to think of something. I can't think of anything, right? Yep, you're right. Except one, Bitcoin. Bitcoin is the first time that something digital can be sent online from one person to the other, where if I sent it to you, it's with you and not with me. That is what makes Bitcoin powerful, and that's what makes it a digital asset. It's a digital asset because it cannot be duplicated, it cannot be hacked, it's immutable, it cannot be counterfeited. There's no chance for double spending. And that is the power of Bitcoin. So I hope everyone now understands what Bitcoin is. Now, let me go further with Bitcoin to explain to you how Bitcoin solves the problems that I mentioned earlier. Oh, and I have to add, by the way, everyone here has Philippine pesos, right? And some of you, most of you, if I ask you right now, how much money do you have in your wallet? Probably a few thousand pesos, right? Is that all you're worth, all your money? Absolutely not. Where is most of your money right now? It's in the bank. 90% of your money, or 99% of your money, is probably in the bank, right? And I want you to think of this idea. Who is earning money from your money? Do you make money from your money? No, you don't. You're happy with that 1%, 2% you get, or 3%? That's peanuts. The bank makes money from your money, not you. not any of us. That's why the owners of the banks are the richest people in the world from our money. I want you to think about that idea. I want you to think about another idea. When I talked about Venezuela, all currencies right now are devaluating every single year. And it's accelerated now by COVID. In the United States alone, there was a stimulus packages. That meant they printed approximately $3 trillion last year alone. That is over 20% of the entire monetary supply in the United States, printed in 1 year. What do you think will happen to the United States dollar by this year? And it's happening already. It's already inflation in the United States. Prices are going up. The value of the dollar is going down. And in the Philippines, I think the people listening here today, some of you may remember this. In 1997, the Asian crisis. Before 97, the price, the peso to the dollar was 24 pesos to the dollar. Within less than a month, it skyrocketed. It plummeted. It plummeted to 42 pesos to the dollar. So if you were holding 1 million pesos back in 1996, by 1997, that 1 million pesos, the value of that would have dropped by about half. So the value of your money dropped to about half because of how the systems are. That's how broken it is. And now you're probably thinking to yourself, wait a minute, Chris. Yeah, but fiat money or currency has value. It's backed by gold. Some of you may still believe that. The truth is, currency all over the world is not backed by gold anymore. It hasn't been since 1971, since Richard Nixon declared that no currency will be backed up by gold anymore. Thus, they call it fiat currency. Fiat stands for value by decree. And the government decrees what the value is. And that's the problem with the currency now. It's not backed by anything. So now let's talk about Bitcoin. I already explained what Bitcoin is. Let's dig deeper into Bitcoin. Bitcoin is a cryptocurrency that lives on a blockchain that is validated by millions of miners all over the world. I want you to think about this idea that there is not one server that holds Bitcoin. It is held by millions. I thought it was thousands. I just found out it was over 1 million servers all over the world. And that is the reason why it's not hackable. Because to be able to hack Bitcoin, you have to hack all the 1 million servers at the same time. The next reason why you can't hack a Bitcoin, the network, is because it's on a blockchain. A blockchain is one block is connected to the next block, to the next block, to the next block on a chain. So to be able to change the programming or to be able to insert whatever malicious code you want to insert, you have to insert it not on one block, but on the entire chain. So you have to do that for the entire chain in 1 million servers all over the world, all at the same time. That is impossible. So if you were a hacker and I gave you a choice, hack the Bitcoin network or just hack the central bank, which would be easier? Central bank, it's only one server and it's not on a blockchain. I could easily insert any program I want to be able to steal anything from it. But on the Bitcoin network, you'd rather be a miner than a hacker. You'd make more money. So that is what a Bitcoin is in as simple a way as I can to explain it. Later, you'll have a chance to ask your questions. Leo is kind enough to be able to moderate it, so feel free to do that. But now let's talk a little bit further. So when Bitcoin was created as a cryptocurrency, meaning it's cryptographically protected, there was a guy who was a teenager that time named Vitalik Buterin, who Bambina just mentioned earlier. Vitalik was this teenager that saw Bitcoin and said, wait a minute, I can improve the Bitcoin network. So what he did is he created a cryptocurrency called Ethereum. Ethereum takes the idea of Bitcoin one step further. So we've gotten to the first layer. Bitcoin is the tip of the iceberg. Now I'm going to go deeper into this iceberg. So deeper into the iceberg is Ethereum, our second layer. Ethereum is practically like Bitcoin, very similar. But the main difference is this. On every coin or every token or every block, you can attach a smart contract. Now, what is a smart contract and what can it do? A smart contract allows you to be able to place a contract between any transactions. So let's say, for example, I lend money to Bambina. I don't have to have a bank in between us to sign a contract that she's going to borrow money and then she's going to pay me back an interest of 10% a year every month until it's paid. It's all going to be on the smart contract. So I don't need to call her up and demand for the money. It will automatically be sent to me based on the smart contract. It means that with a smart contract, you don't need an intermediary. You don't need a bank. You don't need a lawyer. You don't need the government to try to validate any transaction or verify anything. That is a smart contract. And Ethereum created that. Okay, so that's the second cryptocurrency we talked about. And after Ethereum was created, it allowed the opportunity for 3,000 plus decentralized applications to now be developed with all these different functions, from lending to borrowing to now they're creating one for medical purposes where your medical records will be on the blockchain and it's your own private keys, meaning that the records are yours and it's not on a server, but it's with you. And you can release any information you want at any time as necessary for any emergency anywhere in the world. So now your information is all there so that if there's an emergency and you're traveling and they need to know what your medical history is, they can now get that information from you and still protect your privacy. They're going to be creating land titles based on NFTs, non-fungible tokens, meaning that these titles are going to be on the blockchain and it's completely unique and that is verified. And the beauty of the blockchain technology is that it's open to anyone for auditing. It's available on the internet. Anyone can check and verify all the information and ownership of any of these tokens or cryptocurrencies. So I hope I haven't confused anyone here yet. So I'm going to keep going right now. So from Ethereum, what happened is this. Once they're able to create the smart contracts, right? So I was telling you that there's borrowing, lending, there's ways to invest. They created, I'll tell you one of the things they created that fascinated me. It's called the Decentralized Exchange. I want you to think about the analog system that we have right now called the Philippine Stock Exchange, or in the States, it's the New York Stock Exchange. In every country, they have a stock exchange, right? And those are centralized exchanges, and they need people to interact, buying and selling. A decentralized exchange is completely automated. There are no people that are interacting to be able to create the buy and the sell of any coin or token. It is all done automated. And the beauty of that is that it is free from errors. And that's all decentralized. And it's happening right now. It's going to change the world, and it's changing the world. As a matter of fact, one of the decentralized exchanges that's operating right now on the Ethereum blockchain is called Uniswap. Uniswap does more trades per day than Coinbase, which is a centralized exchange that just opened in the United States, that just went public. That's how big it is. And this is just the tip of the iceberg. So I'm telling you guys this because for a lot of you, I know that cryptocurrency sounds confusing, but maybe now you're starting to understand how powerful this is and that this is beyond cryptocurrency. And to even call it cryptocurrency would be too limiting because this is going to affect everything we do in life. This is going to affect how we do transactions, how we do inventory management, how we do data collection, how we do shipping, international shipments and transactions in that way, accounting, law. It will change everything. Now, you're probably thinking to yourself, so, okay, but it's so volatile. I know that's one of the things, especially today, that Bitcoin dropped from 59,000 all the way down to now it's 43,000, I think, probably about there, 43, 42,000. So I want you guys to think about this. You guys remember Apple? Apple in 1984, 1985, or about there, or 83, I think they started. I remember this. The Apple stock was worth about maybe 30, 40 cents, maybe about even 10 cents when it started. And today it's worth a few $100 million. And through its rise from 1983, 1982 to where it is today, there were a lot of ups and downs. And it would go up to about $100 and it would drop down to $50. And people would panic and then sell. Then it would go to 150, then it would drop to 75. And it would just keep doing that all the way to where it is now. It is now. And the people that held it until today are now multimillionaires. Apple took about 30 plus years to be able to get to $1 trillion. Let's talk about Amazon. Amazon was created in 1996. And that time it was only worth a few dollars. And today it's worth a few $1,000s. And the same thing, if you look at the pattern, it goes up and down, up and down, up and down. And you would think it's volatile. Sure, there was the internet bubble that burst at one point, and people were like panicking and selling everything. And then where is it today? Amazon today is worth a few $1,000s. And then there's Google. Google, which started in the early 2000s, and it started with a few dollars as well. And today it's worth a few $1,000s. And it's $1 trillion company. So look at the trend. Apple took about 30 years to get to $1 trillion. Amazon took about 20 years, a little bit over 20 years to get to $1 trillion. Google took about 18 years to get to $1 trillion. Bitcoin started in 2009, and today it's at $1 trillion. It took less than 12 years to do it. This is an exponential growth that's happening right now. And if you think that we're already at the top of that curve, we are not. We haven't even gotten started. We are just about to break out into this massive parabolic curve, meaning the price is just going to keep shooting up. So you guys are at a ground floor opportunity, a chance to be able to take advantage of this revolution that's happening. I want you to think about going back to the 1990s when Amazon and Apple and all those internet companies were coming about. If you could buy their shares now, knowing what you know now, if you could have bought their shares then, knowing what you know now, would you buy it? Oh, hell yeah. You'd buy it in a second. You'd buy it in a heart. You'd throw everything you have at it in the 1990s if you knowing what you know now, wouldn't you? Well, here's the thing. Right now, where Bitcoin's at, I already know where this is going. Historically, based on what happened with the internet revolution and how it changed the world. How it changed the world today. I know for a fact that cryptocurrency, having explained to you what the problems with the current systems are, is going to change the world. It is going to make our world better, more equitable, and more efficient. Knowing that, in about 5 to 10 years from today, and I'll give you a 5-year prediction. I'm pretty confident with this one. Bitcoin is predicted to be at over $1 million per Bitcoin by 2025. I know you're shaking your head going, it's impossible. Let me try to paint a picture for you on why it's possible. Bitcoin is going to be the digital gold, the store of value of the new generation. Now, I want you to think about this idea of digital gold. If it's meant to be digital gold, then let's compare it to its predecessor, gold. Gold is $1 trillion market cap right now. It's worth over $10 trillion. Gold is worth $10 trillion. Bitcoin is worth $1 trillion as we speak. Now, if it's going to replace gold as a store of value, then I'm pretty sure it's going to hit the $10 trillion mark from where it is today. And when that happens, you're looking at about a valuation of about over $1 million. And that's the power of Bitcoin. Now, for some of you, you're thinking, yeah, but gold is gold. Gold is a piece of rock. The value of gold, if you think about it, of a piece of rock, where does the value come from? It comes from the community. So when people talk about inherent value is determined by the community that places the value in them. So right now, the value is in data. Look at the most valuable companies in the world. Facebook. What is Facebook? Data. Our data. What is Google? Information, data. What is Amazon? That's all data. And that's why they're valuable. Data is what makes it valuable. And Bitcoin is, if gold was the analog, I'd say gold would be the cassette tape. Bitcoin would be Spotify. That's the difference. And that's how we're changing the world right now as we're moving along. And you have a chance to get to be a part of this revolution. Now, I got into cryptocurrency in 2019 in December. And I remember my friend told me about Bitcoin, and I was a skeptic, just like most of the people that are probably listening. There's going to be quite a few skeptics here. And I said, come on. I heard it's a scam. I heard drug dealers are using it and money launderers. I said all of that. I said, it's going to go to zero. It's going to crash. It's worth nothing. I Then I decided I'm the type of guy, I'm a skeptic, like I told you. I'm the type of guy that if you give me information, I'm going to do my research to prove against your thesis. I'm going to prove that it's a scam. I'll prove that it's going to go to zero. I'm going to prove that it has no value. So I wrote down all these things and I started researching in it. After 1 month of research, I came with a conclusion that is the exact opposite of what I started with. And I said, oh my God, Bitcoin is real and it's happening right now. And I went all in. I literally mean I went all in. I sold my stocks, my insurance, my mutual funds. My mutual funds, my broker said to me, what are you doing, Chris? You're selling all the mutual funds? I go, yep. I sold everything in December 2019 and I put everything in Bitcoin. And I told my broker this and he was shocked. And I told all my friends, I even made a post on Facebook and I told all my friends, what do you guys think of Bitcoin? 99% of the people that were there told me that I'm going to lose my money, that I was crazy. They said to me, Chris, you know what? Somebody gave me advice. This friend of mine who's very wealthy, who has houses in Forbes Park and Dasmariñas Village, said to me, Chris, I've been investing since I was a teenager. You don't know what you're doing. And I'll make a bet with you, 1 to 5, that Bitcoin will not hit $20,000 by December 2020. I said, I'm game to make that bet. Let's make it 2,000, so you'll give me 10,000. He agreed. Sure enough, that didn't age well for him because in December 2020, as I expected, it hit $20,000. And I remember friends of mine that followed me that time and bought Bitcoin in the early 2020. They called me up December and they said, Chris, I'm going to sell my Bitcoin. It hit $20,000. It might crash. I'll sell it now. I said to them, don't sell it. And they said, why? I said, it's still going to go up. And then I asked him, why are you going to sell it? He goes, well, I need the money. I go, do you really need the money? He just wanted to profit, to feel the profit. I said, don't sell it. But if you really want to sell it, tomorrow morning, I'll buy it from you. He was like, you'll buy it from me at an all-time high of $20,000? I go, yep. I go, think about it. The next day he calls me up. He goes, you know what? I thought about it. I'm not going to sell it. Well, we all know how that ended, right? $20,000 to where it's at today, 40,000. By the way, in January, it went to 50, 30,000, 40,000, 50, and then 60 by March. So he was extremely happy because he didn't sell it. I have so many stories like this of people that just looked at this and just held on long enough. My best story is this. There was a girl I kept talking to about cryptocurrency. And I love this story. She was like, Chris, I'm so tired of you talking about cryptocurrency that I actually remember one of the words you said. What is Ethereum? I think I have that. I said, well, why don't you go check your email? She checks her email, finds her account on an exchange, and she opens it up. She goes, oh my God, I actually have Ethereum. I go, wow, when did you buy it? She bought it in 2016. It was her first paycheck. And she was thinking of buying an iPhone for 50,000 pesos or $1,000 or buying Ethereum for $1,000 in 2016. She totally forgot about it. And what happened was in 2016, right? So by 2020 last year, we were talking and then I looked at it. And then she goes, how much is my $1,000 worth or my 50,000 pesos? Let's do it in pesos to make it easier to digest. I said, you know, your 50,000 pesos, today it's worth 2.3 million pesos. And she was shocked. She was so shocked. She said, oh my God, I'm going to sell it right now. I said to her, don't sell it. She goes, why not? I go, that thing is going to keep going up really high, more than what you could ever imagine. So I want you to think about this. March 2020, it was worth 2.3 million pesos. Fast forward to today. We talk again. She goes, Chris, how much is my Ethereum worth today? Today, her Ethereum is worth 30 million pesos. The 50,000 peso bet she made on Ethereum is now worth 30 million pesos. And then she asked me again, should I sell now? I go, no. She goes, why not? Because the 30 million probably this year. I'm pretty sure this year it's going to be at least 60 million pesos. That is the power of time, and that is the power of the new technologies that are coming into this world right now. And we are literally at the ground floor of this. So you have a chance to be able to do this. And that's the beauty of cryptocurrency. So because of my excitement and my passion in cryptocurrency, and I talk about it every day, eventually I got a call from a company called OKEX.com. It's a cryptocurrency exchange, one of the biggest ones in the world. They do about $9 billion in trade every day. And they said, Chris, you seem to be very passionate about it. And they said to me, would you want to be a part of our company? I'd love to, because I have an advocacy right now. And my advocacy is to be able to help people get into cryptocurrency and to be able to understand what they're investing in. So there are two things that I talk about right now, that I talked about. One is Bitcoin. I'll put Bitcoin in its own, by its own standard. And then everything else is here as cryptocurrency. Why is that? Because Bitcoin has a proposition that no other cryptocurrency has. Bitcoin was created by a pseudonym named Satoshi Nakamoto. Nobody knows who he is. As a matter of fact, it may not even be one person. It could be a group that put it together. And they disappeared. In that way, that's why Bitcoin cannot be controlled by any government. It cannot be stopped for that very reason. It is literally, I would say, a digital natural resource that's been given to us, to the people. And all the other cryptocurrencies, as much as they're different, have a different use case. And that is now the new internet of the world. And that will be worth, what do you think? Gold worth 10 trillion? I'd say Bitcoin will be worth 10 trillion. The rest of the cryptocurrencies, the whole cryptocurrency ecosystem, definitely it'll be worth at least another 10 trillion from this point on. So that is where we're at today. We are at $2 trillion. And you're talking about a technology that's revolutionizing the world as we speak. How big do you think it is? The Web 3, they call it. If Google, Apple, Amazon combined is worth about $5 trillion, what do you think is the entire internet worth? The new internet. And that's what I throw at you guys today. So let me end with this. Let me end with this thought. For the ones that are thinking about this and saying to themselves, I still don't understand how cryptocurrency is changing the world, I'll give you this thought. The current system in banking is that you have the money, you put it in a bank, right? The bank holds the money. With that money, they start to yield it. Look for yield. In cryptocurrency, we call it yield farming. In banking, it's just looking for profits. They lend your money, they earn interest, they make money from your transaction fees. Can you imagine looking at, just to check your balance, you're going to be charged, 12 pesos? Just to look at your own balance? So they're making all this money, but it's your money they're holding on to, right? You're not earning anything from it. With cryptocurrency, we take the bank out of the equation. Now it's peer-to-peer. Your money, you're practically your own bank now. You can lend it to anyone and earn the interest that you're supposed to be earning. You could even earn not just interest, but transaction fees and everything else in between. And that's why you're able to earn a lot more than the 5% or 3% that a bank gives you. In the United States, they only give a 0.5% interest annually. In cryptocurrency, just to give you an idea, the US dollar equivalent in cryptocurrency, you can get as much as 15% annual interest. And yes, that's still small, because the yield that you can get on cryptocurrency can go as high as 100 to 200%. And even more, but I'm not going to go into more because that might be something that's too unimaginable and impossible right now at this moment in time. But eventually you will see that this is so much bigger than what you can imagine it to be. So today, I scraped the tip of that iceberg and I just dug a little bit deeper. And that's as far as I'm going to go, because I only have 30 minutes. And I'm going to end it at this point so I can pass it on to Leo and then open it up for questions for everyone watching today. Thank you.
Thanks so much, Chris. Leo, over to you. Just let me unmute you. Hang on. Leo, can you unmute? Oh, there.
All right. Okay. So thanks, Chris. Thanks, Babina, for all this. It's, before you guys all jump out of your seats and get on the phone and call Chris, let me just say a few things. I'm not going to be as exciting as Chris. I'm going to kind of take the thing down a little bit, a few notches down, just so we get some perspective. But before I start, I just wanted everybody to know that okay, whatever I say today, whatever I tell you, is not investment advice. Okay, what I'm going to tell you today is simply, I hope you should take as educational. So I'm not suggesting that you buy or not buy crypto, or that you talk to Chris or OKEX, who, by the way, I just met Chris last week. So, so it's crypto, as Chris mentioned, is it's an intellectual fascination at various levels, right? It's a technology, blockchain. It's a alternative monetary system. It's a libertarian philosophy, like anti-establishment, yeah. It's a store of value like gold. It's a means to protect your assets. It's a means to exchange your assets. It's a means to store your assets, right? So there's a lot to digest. MIT runs a course on blockchain and cryptocurrency. That's MIT, okay? And they run it for 3 months. So what Chris and I are going to do for you today in 1.5 hours is to give you essentially a 3-month course from MIT for nothing.
By the way, Leo, can I just add as well that I am not a financial advisor, and I'm glad you made that disclaimer. I forgot to make that disclaimer. Nothing I say is considered financial advice, and please consider this as edutainment. And that's all it is, educational and entertainment. Please do your own research.
Okay, so we got your Miranda rights. Anything
Yeah.
that will not be used against you.
Thank you.
Okay, so there's a lot of stuff to digest, and I'm really, if you don't get it, that's fine, because a lot of people don't get it for a long time. I mean, the MIT students don't get it until 3 months. So what I want to do today is to talk to you about a perspective. We got to narrow it to something. My perspective is very simple. I imagine most of the people here in the audience are interested in crypto for one main reason. They want to know how they can make money out of it. Okay, there's all that other stuff, and okay, that's fine. We give it to, but all that heavy intellectual lifting, let's just work on the money side, how we can make money out of this. Chris, by the way, is talking to us from Monaco, where he has a yacht and how much that's made. So, okay, a couple of things. Number one, to understand that cryptocurrencies is kind of a misnomer, because it's really a world. Like Bitcoin and Ethereum. Bitcoin and Ethereum are the two largest currencies in that whole space. Bitcoin accounts for about 45% of the market cap of cryptocurrencies, and Ethereum is about 20%. But they are really two absolutely different things. So Bitcoin is not, it's like literally apples and oranges, night and day. Bitcoin is a store of value. Ethereum is a technology platform, right? It's like, think of iOS, Mac, think of Windows or Microsoft, think of Google. It's a base layer upon which people build their applications, and those are called decentralized finance. So they're really two different use cases, right? So Bitcoin is a store of value like gold, and therefore, in my opinion, has kind of a more limited potential. While Ethereum, if you think Ethereum is like the internet, I mean, it could go anywhere, right? Ethereum could go past the $10 trillion that you're talking about, Chris, about on gold. So it's important to make those distinctions when deciding whether to invest in one or the other. And by the way, for purposes of discussion, I think we should limit it just to the two, Ethereum and Bitcoin. The other thing that I think we need to understand is maybe just a little bit of the language of crypto. Crypto has developed its own language. So the words that you will hear are FOMO, which is fear of missing out, which is essentially greed. And then there's FUD, which is it's fear, uncertainty, and doubt. which is fear. So those are the words, and then you're also going to hear the word called hodl. Hodl are people who buy bitcoins and they just hold it forever. They just stash it away and they worry about it. This is the Chris's friend, the 60 friend that he met, whose money is now worth 30 million. So those are hodlers. And then there's, and it's very important to understand, there's the pump and dump. Pump and dump is the process by which some people will talk up a currency and then just dump the stuff on you. And this accounts for a lot of the volatility. But okay, so let's narrow it down to the investment propositions. What I suggest is we break it out into 3 buckets. One is I wanted to talk, Chris, about the risks associated with crypto. I wanted to talk about the opportunities and rewards from crypto. And then I want to talk about how you actually start the whole process. What do you do, right? So on the risk side, there's 2 things. One is there's the market risk, which is, the price could go up and down, so you're on your own. But for purposes of OKEX, I'd like to talk a little bit about what we call the counterparty risks. So counterparty risk is essentially, say if you buy a car from somebody, that's particularly if it's a secondhand car, you want to know whether the guy is, honest, whether he really owns the car, and whether, there's problems with the car. These are so-called counterparty risks. So in crypto, because it is basically unregulated, there's a lot of counterparty risks. So Chris, why don't you talk us through the counterparty risk in crypto?
Yeah, well, the beauty of cryptocurrency actually is that if you work with the decentralized exchanges, there is no counterparty risk because you're holding on to your own cryptocurrency and you're trading it with other cryptocurrencies. And that's already validated by the blockchain, by the validators. And with that, for that alone, there is no middleman that's doing the transaction. Aside from that, currently though, we do have centralized exchanges like OKEX and Binance and Huobi and all the other ones and Coinbase. And those are centralized. And that's still part of the old system that eventually, I'm telling you guys, probably in the next 5 to 10 years, everything will be decentralized. So that's the only time that true measures against counterparty risk will happen, when it gets completely decentralized. And even right now, as we speak, the amount of transactions that happened on the decentralized exchanges, because there's not only one, there's several, is about $5 billion or $6 billion on the decentralized exchanges. And that's a number that's continually growing by the day. And that's what makes it very interesting for me.
Okay, the other thing is, for if people are going to invest, I don't know, whatever it is, $10,000 or so, let's say, it's just too much trouble to do all this counterparty risk. You got to get in, you got to find, you got to understand all these things that are really difficult.
Right.
So the quickest way, and we will talk about this more later on, is simply to go to an exchange like yours and then just say, okay, I want to open an account and I want to buy Bitcoin and this is my money and that's it, right? And if I want to sell it, I go back to you. So it's kind of, the centralized exchange is really the most friendly form of buying and selling.
Right.
But there are issues. For example, how do you protect yourselves from hacking?
Okay. So regarding getting hacked, the way I see it is like this. Let's just go with this narrative. Right now, where is everyone's money? It's in the bank, right? Yeah. Okay. The possibility of your bank account getting hacked is as much as the possibility of an exchange getting hacked, or the central government getting hacked, or the Banco Central getting hacked, or the government system itself getting hacked. So that's the risk in terms of being hacked. It's all the same. And at this point, that is as best as we can do. And you trust the bank that your money won't get hacked, because if it does, it's all gone anyway. I mean, how much is the bank insuring you for right now? Only $500,000. That's it, right?
Yeah. Well,
so that's basically the problem with hacking, is that it is a problem anywhere, and in any situation, whether it's your credit cards, your banks, anything.
I understand. The hacking issue is, we've heard of Mount Gox, right?
Yes.
Which was an exchange that, it was early on, but they just got hacked and they just lost everything.
Right.
And then there was another one, which is maybe 2 weeks ago, the Turkish crypto somebody just walked off with $2 billion and all the clients' money, right? So there is no checks and balances. There seems to be a lot of trust. It's not regulated. I think that's the problem. It's
Well,
not
yeah.
regulated, so nobody really audits you. So how do you assure your clients that it's all good and we got it together?
Yeah. So with OKEX, the beauty is that we're one of the oldest exchanges actually in the cryptocurrency space, much older than Binance actually. And we do about $9 billion of trade a day. So the exchange itself is very liquid, and it's in the best interest of an exchange to be able to provide the best service and protection for all its clients. And that's why we're growing, is because of that reason. Now, you talk about regulation. The interesting thing is in the Philippines, there's a lot of industries here that are regulated. I don't know if you guys remember CAP, the pension fund, or the education fund. And that's regulated. And unfortunately, the owners ran away with the money. And that's not the first time, nor was it the last. There were several other instances in the Philippines where these, what I call rug pulls or, heists happen within the company where the owner runs off with the money. And that's the problem right now with the lack of transparency. And that's the main difference. Now, also, I wanted to add, Leo, that you mentioned the beauty of an exchange, working with an exchange is this. There are several local wallets that you can work with, including coins.ph and Abra. And the problem with them is that the exchange rates to be able to buy cryptocurrency and Bitcoin is very expensive, number one. Number two, the other problem is that they have limited amount of cryptocurrencies that you can buy or sell versus an exchange, which has, we have over 250 cryptocurrencies that we trade on a daily basis. And that's the beauty of it. And the process is seamless and there are no limits. With Abra and coins, there's a limit of about, I think, 400,000 pesos monthly. With exchanges like international exchanges like OKEX, there is no limit. The only limit is your bank account.
Okay. Well, I guess one of the ways for clients to protect themselves against hacking is, for me, for example, I would go to you and say, okay, I want to buy so many Bitcoins. And then having bought it, I now will do what they call put it in cold storage.
Right.
Where we essentially take the Bitcoins out of your exchange and put it either in a USB or a e-wallet that only I have the keys to. Of course, there's risk too there, because if you forget what the password is, then you've essentially lost the money. But how is this something that you suggest to clients that if they buy through you, to take the Bitcoins off your exchange and put it in their own cold storage?
Yeah, Leo, those are great questions. I love that one. As a matter of fact, what you have to do now is ask yourself, what is your investment strategy? And based on that, you can make a decision. For example, if your investment strategy is to hold Bitcoin and just let it appreciate, which it will, then yes, put it in a cold storage, put it in a USB wallet, and then put it in a safety deposit box, lock it up, make sure nobody has access to it, and you hold on to your private keys and your recovery phrase, which is a 16-word recovery phrase that you should write down and never lose. So you can do that. That's if your strategy is just to hold it and let it appreciate. Now, if your strategy is to let your asset work for you so you can earn from it, then you have to stake your assets, or you have to basically put it out there, leave it on the exchange, or put it on a yield farm, which is like putting it in the bank, and then you'll get a return. For Bitcoin, the average return is about 5% annually. And that is sent to you they even pay it to you every day. Every day it's paid to you. So you can do that, not just with Bitcoin, but with all other cryptocurrencies. Of course, like anything, if you leave it on the internet, there is always a risk. And that's the difference. But if you put it in cold storage, the only risk is if the bank suddenly burns, and then the safety deposit box is damaged, or if you forget your recovery phrase, then it's gone.
Yeah. Okay. The other criticism of Bitcoin in particular, because of the protocol, it doesn't apply to Ethereum because they're working on different proofs of stake versus proof of work, is that it is environmentally damaging, right? I think it's been estimated, I read, that the total current electricity use to power all those computers is equal to the annual output of consumption of Sweden. So the concern is that the governments might stop this process of mining and all those computers because they use too much power.
Okay.
What do you have to say to that?
So to begin with, that's a fallacy. What was stated, and there's a lot of misinformation being mentioned with regards to the power consumption. So number one, let me just address the comment about the power consumption more than more than Sweden, for example. Did you know that the Christmas lights that the United States uses on an annual basis, Christmas lights, is more than Sweden, much more, much greater than the usage of power of Bitcoin. Christmas lights, something so useless.
Okay.
So number one. Number two, 75% of all energy used, electrical energy used by cryptocurrency and by Bitcoin in particular, is actually renewable energy. So the idea that Elon Musk tweeted that it's all fossil fuel and everything, that's less than 25%.
Okay.
Number three, the electricity being used by Bitcoin in particular is actually excess electricity or energy. That's why they're located in countries like Iceland, in the mountain provinces of China, where there's excess electricity that they're just tapping. And that's why it's cheap electricity. That's already there. It's excess. And that creates other opportunities for those far-flung areas to be able to create industries around them as well. And so that in that way, there is no wastage with the Bitcoin technology and the energy that it actually consumes.
Okay. Okay. Next, regulatory. So there's all these issues regarding whether countries will ban cryptos for reasons of their own because it interferes with their monetary system, with their monetary policy. What do you have to say to that? Is this a real limit to the growth of cryptocurrencies?
Yeah. As a matter of fact, I actually am for regulation, and I believe government regulation will speed up the adoption of cryptocurrency. Now, I want you to think about this. The US, they're flip-flopping. You don't know what their stance is on cryptocurrency, but they are actually pro-cryptocurrency. They just want to be able to figure out how they can earn from it. Countries like India tried to ban cryptocurrencies. China has been trying to ban cryptocurrency and Bitcoin for the longest time. And I want you to imagine China, which is the most guarded, that great firewall of China is holding even the internet together, right? And blocking everything, information, cannot stop Bitcoin. That's already China. And I want you to think about the other countries trying. They haven't tried. They tried. They haven't been able to succeed. It is very hard to stop something where you don't know who to talk to, who to block, or who to stop. Bitcoin in particular, what are you going to do? Call their head office? They don't have a head office. There is no secretary or receptionist to call or a CEO that you can complain about Bitcoin and say, can you stop doing that? There is no way of stopping it. But what did happen, if I remember correctly, in Nigeria, they tried to stop cryptocurrency. You know what happened to the price of Bitcoin? It went up to $75,000 when the current price at that time was only $50,000. It went up to 75,000 because as soon as the government blocked it, it became more scarce, and people tried to look for it, and people weren't willing to sell it unless it was at a premium. This also happened in Korea, actually, where the price, it's called the kimchi premium, went up by about 20 to 30% above the actual real value at that time. So that's what will happen when government tries to ban it. Prices go up, and people will find a way because you can transact without the need for government intervention.
Okay. Next, let's talk about market risk. So there's the counterparty risk, and then there's a market risk. Market risk is essentially a function of supply and demand, right? The volatility. Part of the issue with cryptocurrencies is they're seen not to have any real utility value. But of course, even that peso bill that you have in your wallet doesn't have any utility value. It's just a piece of paper, right? So
Right.
the question is, so it's what we call the network effect. So
Yep.
the rate of adoption. So it's a social consensus, a social protocol that if we all believe that this pen is worth $1,000, then it is worth $1,000, right? So now the question is, what would prevent for the further adoption. It's like a cell phone, right? If you have one cell phone, that's not worth anything. Now, if you have two cell phones, that's worth a little bit more because we can now talk to each other. Now, if you have 1 million cell phones, now that is really cool. So the question is, what could prevent the further adoption of Bitcoin?
At this point, I've tried. I've tried to think of something that could stop Bitcoin and cryptocurrency. I cannot think of anything. I mean, yes, there is. I mean, worst case scenarios. If there was a World War III, a nuclear war, that would stop Bitcoin probably momentarily. But even in that case, if that happened, I think Bitcoin would be the last of your worries. You'd be worried about survival at that point. The other one is if maybe the entire world lost the internet all at the same time. But if that happened again, that would be apocalyptic. That would destroy a lot of what we have right now as we know it. Um,
Or could it?
Electricity, that's it. Those are the ones.
Okay, next, market manipulation, right? In the last week, actually in the last 4 weeks, we've had the price of Bitcoin jump from at least 30,000, and it went up to all the way up to 65,000, and then now it's down to 45,000. And a lot of it was generated by tweet from Elon Musk saying, one, that they're buying 1.5 billion worth of Bitcoin, and then subsequently selling that they're selling and they're no longer accepting Bitcoin as payments for Teslas. So the market, I think the numbers I've seen is that like more than 80% of the volume of Bitcoin is controlled by what, maybe 20 people?
Yeah.
So, I mean, obviously that's an exaggeration, but
Yeah.
we're talking orders of magnitude. We're talking orders of magnitude, right? And crypto, by the way, it's all about orders of magnitude.
Right.
So, so the question is, what is the impact of these what so-called whales? Whales are these
Yep.
people who have lots and lots of Bitcoin, which they have accumulated when it was at 29 cents. Right.
Right.
Yeah. So, what is the risk, the market risk of these whales whipsawing the market, as we have seen today? How markets are being whipsawed by comments by people like who have a lot of it.
Right. So to begin with, I think it's a fallacy again that people have because it's so sensational for media to throw around the headline that Elon Musk tweets crashes Bitcoin. I think that just plays into the whole narrative, and it's so sexy to listen to hear that. But in reality, this correction was bound to happen because if you look at Bitcoin's chart and rise, it hasn't had a correction since December 2020 when it hit its all-time high. It's been on an upward trend. It needed to have a correction, and the correction is healthy, and it's necessary to just blow some steam off because you can't have a parabolic rise that just keeps going up. It needs a healthy correction, and this was about the right time to get that healthy correction. And for the people that maybe are watching that know how to analyze charts from the stock market, you can use the same charts analyzing skills to look at this as a chance of just slowing down a bit before it takes off to that new all-time high. Now, another thing that we have to look at is this chart that Leo and I actually know that a few people may know, but for the ones that don't know it, it's created by Plan B. Plan B is a pseudonym again. This guy's, from what I just found out, he's a Dutch investor and investment analyst that came up with this chart of Bitcoin and created a graph based on the supply of Bitcoin. Now, this supply was based on the idea that Bitcoin has only 21 million Bitcoins that will be mined, period. For the entire life of Bitcoin, it's going to be capped at 21 million. And every day, there's going to be Bitcoins mined that will be halved every 4 years. I hope everyone still follows me here. So every 4 years, the amount of Bitcoin that's going to be mined is going to be cut in half. Right now, we're at 6.25 Bitcoins per day being mined. In 2024, that's going to be cut to just 3 Bitcoins that'll be mined every day. And then another 4 years, it'll be cut in another half. For that reason alone, they were able to chart the price of Bitcoin since 2009. And what they noticed was it was on an upward trend. Leo, if you don't mind, maybe I can share the Plan B stock to flow chart so everyone can see what I'm talking about. And then I can...
Yeah, I just don't know if we have enough time.
Okay.
It's getting a little technical for people.
Okay, yeah, never mind. It's okay.
We're getting into we're getting carried away.
Okay, so let me just simplify it just to summarize that point about the volatility and everything. So the collapse, the drop in the price today was, if you look at that stock to flow chart, it actually goes back to the stock to flow line, which is where the price should be right now. The 59 to 60,000 price was too high at this point.
But
But by
overshot.
June, it'll be about the right price. So that's it.
Okay, so okay, we know Bitcoin. You've given us a $1 million Bitcoin price in 5 to 10 years, based on its utility as a hedge. So that's over the long term. Now, over the short term, though, how do you suggest people buy and sell? It's so volatile, right?
Yep.
So the question is, when do I buy and when do I sell? Because this thing is going up and down day, right? So in stocks, as some people will know, there's price to earnings ratios, there's price to book, cash flow, et cetera, which you don't have in Bitcoin. So how the heck you decide, okay, I'm going to buy at this price and going to sell at that price, if you don't know how to do technical analysis, which is the charts that you're
Right.
talking.
Oh, great question. Okay, so let's start with this. For Bitcoin, it's very simple. I just looked at the market cap of Bitcoin. Basically, what's the value of Bitcoin? It's at $1 trillion. And then I looked at the value of gold. It's at 10 trillion. Right there and then. I know that Bitcoin is going to hit the $10 trillion mark. So for that reason alone, at 40 and plus, we've already seen Bitcoin at 63 or $65,000. I forget which was the all-time high. We've already seen it at 63. Right now, it's at a discounted price of only 42,000 pesos. $42,000. This is a good time to buy. Right now is a great time because probably within less than a month or a month at the most, Bitcoin's going to be back to 60,000. And you're going to be like, wow, I just had a 50% gain in a month. You can't find that in any other asset right now. So that's one. The other one, for the long term, how do you assess other assets, other cryptocurrencies? Same market cap. Use the market cap idea. With Ethereum, for example, Leo just painted a great picture of Ethereum. Ethereum is the foundation of this new internet. Well, all apps will be developed on top of. The new Facebook, the new Googles, the new Amazons, they're going to be built on Ethereum. Now, I want you to imagine Facebook, Apple, Google, Amazon, they're worth at least $5 to $6 trillion. How much do you think that base layer that's going to be holding all of that technology is going to be worth if the assets on its own are worth trillions of dollars each? That's why Leo was saying 10 trillion might be too small for Ethereum. It could reach a lot more than 10, maybe 20.
I did not say that. I did not make a price prediction, but anyway, it doesn't matter. Well, I mean, just to add a little bit, Apple has a market cap of 2 trillion, roughly, right? Microsoft, well, with Windows, has maybe half of that market cap. So Ethereum, which is the digital comparison, has a market cap of about 300 to 400 million, right?
Yep.
The question is, why is one protocol, Ethereum, which is the base layer for everything, right, have a market cap that is only maybe, what, 25% of Apple's? Or 10% of Microsoft? Why, so
Yeah,
we're talking just orders of magnitude,
right.
possibilities of where this thing could go. Okay, so let's jump. We don't have a lot of time. We got about 25 minutes. So let's just jump into the how to invest directly,
Yep.
how to invest, how to participate in this opportunity that you are so passionate about. So
Go ahead. Sorry, Leo. Go ahead. Please
okay,
finish your.
one is obviously to open an account with with your firm, right? So do you want to talk a little bit about, do a pitch?
Sure. I'd love to. Thank you for the opportunity. So basically, guys, if you want to invest in cryptocurrency, I would highly recommend you go to an exchange like OKEX.com. I'll actually share you my referral link on the chat box within a few minutes. And all you have to do is get yourself registered and verified. Okay. So that means showing your ID. And then that's to also protect you so that you can always verify your identity. Now, once you do that, the very first thing you have to do is convert your pesos to a cryptocurrency. All right, a base cryptocurrency. I would always suggest you buy either Bitcoin or USDT. USDT is the cryptocurrency equivalent of the US dollar. So you convert your pesos to USDT. And once you have USDT, you can now buy any cryptocurrency you want on the exchange, including Bitcoin, Ethereum, and over 200 plus other cryptocurrencies that you can now invest in. And that's how you do it. But just to be clear, to be able to buy USDT, I would recommend you go to our P2P platform, peer-to-peer platform. There are people that are selling USDT, and all you have to do is click buy their USDT and then send them the money to their bank account, and they will release the USDT to your OKEX account. And for the people that are thinking, well, what if they don't release it? We actually protect the buyers from the sellers as well by putting the cryptocurrency, the USDT, in escrow. So if the seller for some reason doesn't release it, we can release it on their behalf, and they will be penalized for not releasing it on time. So that's why they always release the USDT. So I'll leave my referral link, and you guys can also add me on my YouTube channel at Christan is here. So youtube.com/Christan is here. Or you can find me on Twitter or Instagram at I am, letter I, letter M, Christan. Or you can find me on Facebook. Just type Christan or Christopher Tan, Bitcoin. You'll my name or my face will probably pop out. And I'd be more than happy to help anyone and everyone who wants to get into this. I answer as many questions as I can to be able to get everyone to finally be able to be a part of this new revolution.
Okay, well, okay, this might actually be a time to explain something which took me a long while to understand, right? Which is the concept of, let's just take Ethereum. Now, Ethereum is a platform. It could be like Windows. But how do you monetize that, right? There's no currency attached to a Microsoft Windows, right? There's no currency attached to an iOS Apple platform. So now the currency of Ethereum is called Ether, right? And so the question is, what is the relationship between Ether and Ethereum?
Right. So Ether is the currency of Ethereum. It is what they call the gas of Ethereum. And that is what runs the entire network. It is what pays for the transaction fees so that all transactions can be validated on the Ethereum network. And the beauty is this, that if you have your own Ether, if you own Ethereum through their Ether, you buying Ether, you actually kind of own a piece of the network because you're part of that. And when you stake your ethers, you earn staking rewards, which is the yield or the interest that you get. I say interest because that's the easiest way to explain what you get back in return. But these are actually in the form of transaction fees because you staked it. So you're part of the ecosystem that runs the network of Ethereum. So in that sense, you have a stake or a part of that company. And that's the difference, the main difference between how cryptocurrency is run compared to a traditional company where one person, one server owns all of that information and all of the transactions goes through only that one company. That could be like Amazon or Google or Apple. They own all of it. But in this case, it's decentralized. We all own a piece of it in this sense.
Okay, let me just try and put it in another way, and I'm not sure if that's the correct way. There's this platform called Ethereum, right? And people want to be on that platform because they develop their applications on it, right? But in order to develop their applications on it and to secure it, they have to pay somebody, and the people that they pay are not accepting anything except Ether, right?
Right.
It is the equivalent. For example, if you want to go from Kowloon to Hong Kong side, right, by ferry, you can't go to the till and pay cash. You got to buy a token, right? And that token is what you insert into the slot, and that's what gets you into the. Is that would that and if everybody wants to travel on rush hour on that trip, and there's a limited amount of tokens, they will bid up the token because they wanna go on the ride, right? Or develop their platform. Is that similar, like a New York subway system? Can't pay cash, you gotta pay a token, right? So that the token is the Ether, and that allows you to play in that sandbox. Is that an analogy?
Yes, I love the analogy. That's actually, yes, you can use that same analogy, yes, to explain what Ethereum is and how Ether relates to Ethereum. Yes.
Okay. So going back to how do people access it? Okay, Bitcoin. The problem with buying Bitcoin, frankly, and I've been looking at Bitcoin for 4 years, right? And I did not get into it, unfortunately, 4 years ago because I was afraid of the counterparty risk. So I've been looking for other ways to participate in the upside without actually buying the Bitcoin. Now there's other ways to do it, which are actually simpler, right? And correct me if I'm wrong. One is you can actually buy so-called exchange-traded funds, right? Which are like a mutual fund, but all it owns, say, is Bitcoin.
Mm-hmm.
And those funds are actually traded openly in the Canadian Stock Exchange, so you can buy and sell it like a stock, right? Then you can also buy it via a trust, which in the United States, the SEC has still not approved ETFs or these funds for Bitcoins because it's too volatile. But you can buy it through so-called trust, which is essentially a trust whose only asset is a Bitcoin or an Ethereum. And the ticker symbol is GBTC for Bitcoin and ETHE for Ethereum. So you can buy that if you have a Schwab account, Fidelity account, Merrill Lynch account, and the screen you can click on that and you can actually buy and sell that. And that theoretically moves in tandem with the price of Bitcoin, right? Or Ethereum. The third way to do it is you can buy, and here's where we're really getting kind of institutional and professional. You can buy it in futures, right? You can buy futures in Bitcoin. That's too complicated. So that's institutional. The other thing is you can buy companies that mine or that secure the network. For example, there's two companies in the States that are publicly listed, New York Stock Exchange. One is called Riot, and the other one is called Marathon Mining, where you could actually buy them. So if this was the gold rush, you're not actually buying the gold, you're buying the forks and the shovels that people are using to mine the gold. So that's the equivalent. So you're kind of you move in tandem with it, with the price. The other one is you can invest in companies that are primarily role is to invest in Bitcoin, like Microsoft Strategy. These are companies that are publicly listed, so you just buy them, and most of their assets are in Bitcoin. So you kind of get by osmosis, you get into that. And I think lastly, there are, I think the US will probably come up with a US ETF on cryptocurrencies soon. And also you can buy funds, which are mutual funds, which are invested in companies in the crypto exchange. So, right. Okay, so there we go. We're got 15 minutes to go. I think maybe we should open this up to questions.
Yeah, we'll take some questions. I have one question first. Maybe that takes a girl to ask this, right? But are you married, Chris? It's a personal question. Sorry.
No, I'm not. I'm single.
Okay. If you had a family, would you be more conservative about holding cryptocurrency?
You know what? Right now, I feel very secure with cryptocurrency that I would rather have my money in cryptocurrency than in Philippine pesos. Okay. So that's how safe I feel with cryptocurrency. I actually have most of my money in cryptocurrency. I am peso poor.
No, but I'm wondering, like, if you had a family and kids to send to school, they have to go to the doctor, this, whatever.
Yeah.
Would you actually have that much money in crypto, or would it be spread out?
I probably would. Yeah, I wouldn't spread. I wouldn't spread it out. And I have a friend who has a family, and he's exactly like me. And his wife and him talked about it already, and that's what they did.
Okay. Okay, let's just go through some of the questions. What does staking mean? You said staking. You
Yeah.
mentioned that earlier. What does that mean?
Yeah, staking is basically like lending your money so that it can be used to validate the network and keep the network running, and then
Mm,
you get a percentage return that you can think of as interest.
okay. Now, Satoshi, nobody knows who he is or if he's a consortium of people.
So
Would you
Satoshi Nakamoto, yeah, is a pseudonym created by this group called the Cypherpunks. They are a
Okay.
group of hackers that created Bitcoin with the notion of being able to replace the current monetary system. And I think honestly, there's a suspects for who Satoshi is, and one of them, the most likely suspect, is dead already.
Okay. But there, you said 21 million Bitcoins, right?
Mm-hmm.
That's the cap. Now, after all those things have been bought or mined, then it's just going to be openly traded. Is that what you're saying?
Yes, it'll be circulating throughout the world. And what's interesting is right now, because of the price of Bitcoin, eventually, as the price keeps rising, people are not going to be asking how many Bitcoins you have anymore because most people will not be able to afford one Bitcoin. They're
Yeah.
going to be talking in the 100 million decimal points
Mm.
of a Bitcoin, which is a Satoshi. So one Satoshi is 100 million decimal points from one Bitcoin. And as a matter of fact, one tracker of cryptocurrencies already refers to Bitcoin as Satoshis.
So would that be the equivalent of dollars and cents kind of
Yeah,
thing
right.
in crypto? Okay, we have a couple of questions about like with this kind of theme. If you had 100,000 pesos, how would you invest it in crypto to start with?
Yeah. If I only had 100,000 pesos, I would put everything in either, maybe, okay, not everything. Maybe I'd do 50% Bitcoin, 30%, 40% Ethereum, and 10% I'll play with the smaller altcoins. The reason that you want to put it in Bitcoin and Ethereum is because if my theory is correct and the way the analysts are looking at it, you're talking about Bitcoin at 50,000 pesos, that it will be about 100,000 pesos within the year, and that will be 1 million pesos within 5 years.
Wow.
Ethereum is probably going to do about the same. The 40,000 pesos in Ethereum right now will be 10,000 pesos, 100,000 pesos, and it'll probably be 100, probably about a million as well in about 5 years.
Just Babila, just further on that question. I think what we're talking about is asset allocation, right?
Mhm.
So I think from an investment standpoint, which is something that I know a little bit about, I think we couple of things. One is you need to understand your risk profile, right? Like are you married? Are you single? Are you young? You're old? So you have to understand your risk profile because it is very very volatile, and I have to emphasize that, no. And the challenge here, it's people are torn between fear and greed. Now, those who are successful is those who are able to be fearful when they are actually greedy, and to be greedy when they're fearful. So if you're feeling greedy, no, you gotta be fearful, and if you're feeling fearful, that's a good time to be greedy. So you buy low, sell high. No? Um, Thirdly, I think the consensus is that people should allocate between 1 to 5% of their investable assets in crypto. So if you have 100,000, you theoretically should only invest between 1,000 to 5,000 pesos of that in crypto, which over time could actually get you to 100, to actually double your money if Chris is correct. No? The other thing is you need to hold for the long term. I think
Mm,
if you're trying to trade the market, it's up, you're trying to sell it and then hoping to buy. I think you will eventually lose money doing that. You just gotta buy and hold and just leave it for your kids, right? Okay, I'm gonna put 100,000 and it's gonna be for my kids, and I'm not gonna look at it for the next 5 years, right? Because you're gonna go crazy if you look at it for every day. And lastly, I think it's very important for investors to examine the counterparty risks. Who are they dealing with? Are they people that they trust? Do they know what they're doing? Do they have secure systems? I think a lot of people lose money because of not giving enough weight to what I call the counterparty risks.
Um, That was like a this whole thing was like a master in crypto. I think this whole session. What about Chris? What about governments starting their own crypto called GovCoins?
Yeah. So the problem with
Is that a
that, it's like yeah. So the problem with governments creating their own cryptocurrency, and they can, China's actually trying it right now, is that the people have to trust their governments, that the government is not going to be doing what they're doing right now, which is creating an infinite supply. So it's the same as how Walmart and when Amazon came out, Walmart was the brick and mortar, Amazon was the digital version. And Walmart decided to go digital, and we know what happened there. Amazon became the giant, and Walmart failed in that effort to go digital. It's the same with the government who's using an analog financial system to try to convert it to digital. People are still going to pick something that's decentralized with no government control, but it doesn't mean that they're not going to use it. They probably will still use it because the government is going to force it on the people. But at the same time, if people can hold their money where the government cannot touch it, they'd probably prefer to do that. Because remember, when government goes digital with with the money of the people, they can confiscate it a lot easier. Now that it's completely digital, they have full control of your money, and they know exactly where you spend it, when you spend it, and how you spend it. And when they decide they want to take it from you, they can, like this.
Yeah, just on that point, Bambina, I think it's a good point. But essentially, so-called central bank uh, coins are no different from fiat money.
Right.
They're a digital equivalent. They're subject to the same weaknesses, which is what Chris is saying, as normal money. There's one guy up there, the central bank governor, decides, okay, I'm going to issue more cryptocurrencies. Because, so it does not solve the essential premise and weakness of the fiat system.
Yeah. Thank you, Leo. That's such a great way of putting it. I love the way you said that.
What about the practical applications of crypto? Like, for example, you say you hold all your money in crypto and you have a few pesos for whatever, pay your rent and all. What is the logic? I mean, what is the practical way of, let's say, exchanging your crypto for your needs here in pesos?
Right. So there are uh, virtual asset service providers. So these are virtual currency providers in the Philippines. What you do is, when I'm ready to exchange my crypto to pesos, I can either go to any one of the virtual asset service providers and send them my cryptocurrency, and then they can deposit the money to my account. In the other way, the faster way is like on OKEX. All I do is I actually sell my USDT, my cryptocurrency, to anyone who wants to buy it. So I'll be a P2P merchant, and I'll sell it, and then they send the money to my account, and then I'll send them the USDT. So that's another way to do it. The other way is I send it to like coins.ph, and then I send that to my bank account from that point.
Okay.
So parang foreign exchange trader.
Yeah.
Yes. Parang foreign exchange. Yeah. Money changer. Parang ganon. Yeah.
Money changer, yeah.
Okay. We have a couple of questions about SHIB. So this is another one named after a dog, right?
yeah. So and honestly, for everyone watching right now, I know that a lot of you heard a lot about Doge, and
Yeah.
how a lot of people made a lot of money in it. And then now there are a lot of copycats of the dog coins, like Shiba, Akita, Inu. There's a Doge Elon that came out. There's a lot. My advice is, if you're feeling like gambling, you could make a lot of money, but you could also lose a lot of money, because these are meme coins that have no value, no use case, no fundamentals. You can look at it, it's really nothing. Just imagine this. Doge, for example, has 110 trillion, 110 trillion, or oh no, sorry, 110 billion, and another 5 billion every year that's being mined. That's a lot of coins that are out in the market. The Shiba, I think, is at 1 trillion. Although they have a deflationary burning mechanism, why invest in something like that when you have great assets like Bitcoin, Ethereum, Cardano, Polkadot? I mean, there's a lot of really good ones. Pick any of the top 3, except Doge. Doge is on the top 5. And it's too risky.
And there's XRP as well, right? There's another one called
So
XRP. That's not a
yeah.
meme coin though.
No, XRP. Okay, so a while ago I was mentioning about remittances, especially in the Philippines. This is a big thing. And when people remit money, it takes a long time for you to get the money. And even if it's faster, the transaction fees are very high. And we use a system called the SWIFT
Mhm.
system, which has been around since the 1970s. It is an antiquated system that has not changed since the 1970s. I want you to think about that idea. It is time for a change. XRP has, and Ripple, the company that created XRP, has come up with a system to make the transaction between bank to bank so that you can get your money faster within literally minutes at a fraction of a cost. So for that reason alone, I think XRP has a real use case. And although they have the SEC investigating them right now with a lawsuit, whether or not XRP wins or loses the lawsuit is irrelevant. Because if they lose, all they're going to do is be slapped with a fine and ask for some changes to the system, and they'll still be able to operate. And I think from that point, the value of XRP will go up.
What is it at now?
150.
Okay.
So it'll
And
probably get $3.
okay. Okay, we're running out of time. So, Chris, last words.
Yep. Like Leo said, like please do your own research. And for every other cryptocurrency, maybe what I can recommend to people as well as this: if ever you decide to invest, please do not give your money to anyone promising you that it's going to earn 10, 20, 30% per day, per month, or per week. I don't care how many times. Do not give your money to anyone that is telling you they're going to invest your money in Bitcoin or any cryptocurrency. You do not need somebody to invest your money for you. You can do it on your own. If you're too lazy to do your research, then you shouldn't be investing in this business. That's it. And if you're going to put your money in cryptocurrency, please use OKEX. I'd really appreciate it. It's a great platform. And you have me. I left all my social media. You can reach out to me. I'll be more than happy to help you be able to invest your money at whatever amount.
Or you can ask us at Manila House how to get in touch with Chris anytime.
Yes, please. I'd appreciate that. And thank you
Drop
to
us a
Manila
line.
House. You guys are awesome. The
Okay,
food.
pleasure. And Leo, now from the, this is like a Cat Stevens song, right? Chris and Leo. So from your point of view, you've
Okay.
been an investor a long time and you've seen,
You
the
know,
market.
no, I've been an investor only since last year. So unlike Chris, I have not seen my money grow from 29 cents, which is the price of Bitcoin on May 18th, 2011. On May, which is exactly 10 years ago, one Bitcoin was worth 29 cents. I just looked it up in Google. So today, that same Bitcoin was worth between 45,000 to $65,000. So if you're thinking, that's okay with me, that's a good return. So I also need to, crypto used to be a joke, right? It used to be a scam. It used to be drug dealers would do that. But I think it has now gone beyond that. I think they've hit the tipping point. But having said that, it's still at an early stage of adoption. And a lot of the big institutions like JP Morgan, Goldman Sachs, Fidelity are now traipsing into it. JP Morgan has officially advised their high net worth clients that they should invest between 1 to 5% of their assets. And these are people with assets of over $30 million into crypto. So, and I think the thing about it is the greater the adoption, the harder it is for the regulators to ignore crypto and or even to shut it down, because there's just too many people. There are insurance companies, Mutual Insurance in Boston actually owns Bitcoin. And there's so many of these institutions that own it, so you can't anymore just clamp it down unless you have a really good reason for it. So it is not a joke, but it is highly speculative. And if you're going to invest absolutely for the long term, and don't try and time the market.
I think that's very wise advice. I think Chris would agree, right? I mean, it's, as you were saying, it's not something you buy and trade just like that and hope to make money on the quick, right?
Yeah, absolutely. This is definitely for the long term. You're looking at about 5 to 10 years, and you're going to see your fortunes change in about 5 to 10 years.
Great. So on that note, thank you very much for joining us today. It was a pleasure to have both Leo and Chris with us, and I hope you all learned a lot. We've had a couple of these talks in the last couple of years, and this is the first time it's been really clear to me. Your analogies have been spot on, Chris. So I'm starting to understand it a little better.
Yeah,
Yeah.
thank you so much. And feel free to reach out to me, Bambina, even after this. I'd be more than happy to help you.
Thanks, Bambina.
Okay, thanks. On that note, I'm going to say goodbye to everyone. This video will be up in a couple of days on our YouTube channel, Manila House Private Club at YouTube. And so you can catch it there if you want. Okay, thanks very much, guys, and see you again soon.
Bye.
Bye.
Bye, Chris.
Bye bye.
Bye, Chris.
Together.
Thanks.